The Fed just killed any hope of a June interest rate cut, and it's going to cost you tens of thousands of dollars in higher mortgage payments. And despite Trump's demands and the market predictions, Powell and his team are just holding firm, 4.25 to 4.5%, keeping mortgage rates just stuck at painful levels. And make no mistake, we're witnessing the most severe housing affordability crisis in a generation. First-time buyers are just being locked out completely. Homeowners with 3.5% rates are refusing to sell, and the entire market is grinding to a standstill. And I think your financial future hangs in the balance. So today, I'm going to give you the unfiltered truth about what this means for your money. And stay with me until the end, because I'm going to share 5 unconventional strategies that smart buyers are using right now to save hundreds on their monthly mortgage payments, despite these high rates. Now, most agents won't tell you about trick number 3, but it could be a game changer for you in this market. Let's get to it. So first, what was the Fed's latest decision? Well, you know, if you read the papers or you listen to these videos, Fed just kept rates steady. There's no rate cut in June. Sorry, not going to do it. Nope. Now Trump, as we all know, he pushed hard for cuts. But the Fed had just kind of completely ignored his demands. He's trying to get things done. It's only been 100 and some days, and he's got so much done. Let's keep moving on this. You know, mortgage rates. What happens is they move with Fed's decisions. Not kind of directly, but the trend still holds. When they come out with a decision, they're not lowering rates, it just sends a signal to buyers, let's hold off. Now the Fed, they say they're worried about 2 things. They're saying, oh, the tariffs on imports from China, Mexico, Canada are inflationary. Well, there's a whole back-end long-term goal for these tariffs. Let's keep going. What Trump's trying to do is change the whole trading globally, all over the world. This is not just right here in the United States. And the second thing they're saying, okay, inflation is up, so rates have to stay up. That's their logic, okay? Now, the market previously bet on this June cut, and now it's off the table. So mentally, in everybody's mind, everybody was thinking rate cut, let's wait for the rates, and now, nothing. So what is the real impact on housing for this? Well, since mortgage rates are kind of stuck around 6.7, depends on the day, you know, these 3% rates, they're just not around anymore. And people need to stop thinking about, oh, I should have bought a home then. You know, just think about right now. So your mentality needs to change. When you hear this and it isn't what you thought it was going to be, that might not be good for you mentally. But let's keep going here. What's another impact? Well, inventory's been frozen for the last 5 years with homeowners with these 3% rates. They're not moving. They weren't moving because of COVID. Now they're not moving because they can't afford to move. I have Marcia, a seller client of mine. She's going to be selling 2 years ago, 3 years ago, many years ago. And over the years, yes, her home has come up in $150,000 of equity, but she still can't make the move. Financially cannot make it happen. And this is what's happening with the empty nesters. The empty nesters are not moving. So the move-up buyers have nowhere to go, and these first-time buyers, they have nowhere to go because the move-up buyers aren't going. So we have like we're a little stuck right now. And the other impact, I think, are that first-time buyers, they really can't make the math as far as their monthly payments work because they're just too high. Although it's better to buy a house than, you know, pay rent, but they just can't, in their heads, get this down. Because I think a lot of first-time buyers, they're thinking they want to buy their forever home, and they're stuck in that mentality. They just need to buy a home. Stay in it to 5 to 7 years, like it used to be. That's what the old traditional thing was to do. But right now they're thinking longer term, and they just can't make those numbers work. I say buy now, and then move up and rent it out and become, that's what generational wealth is, that's what real estate investment is. The other impact right now because of this is I think sellers have to adjust, and especially in some areas, like in Philadelphia, there's a lot of houses on the market. In Montgomery, in the burbs, Bucks County, all these counties, it's still a buyer's market. We're not getting 20 offer weekends, maybe 5 to 6 offers, depending on the house and how it's priced. That's why as a seller, you need to price it right or your home's gonna sit. I always say price below what you think you're gonna get so you can attract people down here who know they have to come up here. It's always to get them better. We listed a house for $499 when you got $565, things like that. And the other thing I think that's happening is that investors, they're kind of stepping back. I have an investor who was going to buy this condo. He just stepped back. I mean, it's a great deal for him. He just, he said borrowing costs are a little high right now. So that might ease the competition for us regular buyers who are out there who don't have all the cash. I don't see as many cash offers coming in as much. I did have a condo just sell, it's this townhouse in Hatboro, sold for $385, but it was cash, no inspections, the date the seller won it, versus an FHA she could have taken for $387 with a $400,000 up to for escalation, and another one at $402. So she could have taken that number, but I'm saying home sellers, think about those cash offers because you're not going to see them that much anymore. So let's talk next about economic cross currents. A lot of things going on right now. Well, what do we mean by that? Well, on the surface, unemployment looks okay. Everything looks good, 4.1%. But the GDP, it shrank in first quarter. It went down 0.3%. And businesses, they rushed to import before tariffs, hit. And that created kind of like a dip. I talked about that in my tariffs video. I think it was last week, because disruption is creating both challenges and opportunities. What Trump's doing right now is disrupting tariffs, all these different things to get people awake. We've been sleeping. And like I said, disruption creates opportunities, and there are also challenges. So there's this cross current. You can say that we're entering stagflation, which is like slow growth plus rising costs. And you also have builders that were hoarding materials before the prices went up. So that kind of threw off the supply thing. And most importantly, what is the long-term goal of these tariffs? Long-term goal of the tariffs was designed to reshape supply chains and kickstart domestic manufacturing of building materials. United States manufacturing of building materials, okay? And it's gonna take time. I mean, like I said, it's only been 100 days. It takes time to do all this stuff. And once you have that domestic supply chain ramp up, pricing volatility will drop. So all this cross-current stuff, we have Powell, he just put us in a wait and see mode. Wait till June, we'll see what I'm gonna do then. Now, I don't think anybody should be given that much power right now. And I know he's out the door in 2026. And right now, they penciled in 3 rate cuts. They better deliver. No more of this nonsense. So I'm gonna tell you what this means for buyers, and then I'll say what it means for sellers. So hang in there, guys. This is important stuff. You buyers, do not wait for rates to fall. 6.7% isn't historically terrible. It's not that bad. And with all that said, you've got to get pre-approved. You've got to talk to a lender. Find out all the different programs out there. Is there a grant program for you where you can get some of your closing costs paid? Are you doing conventional? Are you doing? How can we restructure your loan to make it more affordable for you? And the reason why you should get pre-approved now, because lenders are just getting pickier. You might not be able to get approved later on. And maybe buyers need to adjust your price range that works with today's rate. What I'm saying is, I think buyers, like I said a little bit earlier, they need to go back to buying a starter home and then move to the forever home. This mentality of the young people today, they think they need to buy this forever home, but that's not how it works. You buy a starter home, a condo, a townhouse, you hold on to it, and then you buy your next home as your life grows and your family grows. That is creating wealth in real estate. Thinking you're going to buy this home that you're going to live in forever, you're in your 30s, your first home, 20s, whatever it is, it just won't happen. Things will change in your life. Very rarely does it happen. So I think the mentality buyers just need to change a little bit. And lastly, just go out and find motivated sellers. Homes have been on the market for 30 plus days. You could offer them some deals. It might not, it doesn't have the stainless steel appliances, or it's not all painted gray, whatever you're into. It doesn't matter. All those things can be changed. Go after those homes that need work. Get out of that mentality that everything has to be done for you now. Then that's how you're going to be successful in this market, not by waiting rates to drop. And even if it does, you're still buying that home that everybody wants. Buy the ones that nobody wants, and then recreate it for your own life. Oh yeah, one more thing. ARMs, adjustable rate mortgages. If you're really not staying that long, using my 5 to 7 years, adjustable rates can save you thousands over that 5 to 7 year period, right? So that's something to really think about. And if you are staying a little longer, you can always look about buying your rate down. Points, getting points. So what does this mean for sellers? What does this mean for sellers? Well, in this market, you need to price it right the first time. The market will no longer forgive overpricing anymore, especially in areas where there's more homes on the market than sales. Like in Philadelphia, I went to look up comps for this row home downtown off of Front Street. And there were so many. And she's like, oh, I want to price it up here. I'm like, well, you don't have a new bathroom or a new kitchen. The common sense means to price it lower to get more eyeballs to look at it, so then you'll get even an offer. You know, an offer would be nice in some of these markets where it's a buyer's market. It's just transformed like overnight. Not in Philly in the burbs, still a seller's market. Second thing you can do, you can offer a rate buy down. So you can pay the points for the buyer, and it could be cheaper than reducing the price. It'll make your home more attractive. I think it's a really great option. Next, your home, it needs to look fantastic online, so you need to stage it. You might want to consider watching my video about low-cost fix-ups. Great video I did a few weeks ago. Do some of these low-cost fix-ups. Make your home shine. You got to make sure you hire the right realtor who's going to make sure your home is marketed properly and has proper photography and uses the Coming Soon program. I've done all these different videos about all this stuff, and you can get it in my book, Home Selling Sharks. The ideas in my book, which a lot of them I do on my videos, can save you thousands of dollars. Make sure you get it on Amazon right now. Next, flexibility is really good. You need to be willing to work with the buyer's timeline. Work with their timeline. Be a little creative here. Find out what's good for them. Be open to just about anything. And then you can negotiate down from there. You have to open the doors first and let them in. And then you can close the door behind and then negotiate. That's what I believe in. I'm a negotiator. I love to be able to get them in and then see what you got and then take it from there. And also creative financing. I just had a seller who offered owner financing, and it was awesome. And we got so many people interested in that because we put the rate a little bit lower what it is today. And we got a great buyer from it. Actually paid him a little bit more because of the owner financing. So it does help. And you could also agree to pay the buyer's transfer tax or any of the closing costs, give money towards closing costs. These are just creative things to do if you're selling in a market where now it's in a buyer's market and there's more homes on the market than there are sales. You can just look at that. Have your realtor look up if there's, like, for example, 10 houses on the market but only one sale. That means only one house is going to sell, one house a month, really, basically. So you want to make sure your home is the one. Pricing it right, make it look good, be flexible, be creative, offer some financing, things like that. But I really want to talk about the political angle here. I'm not really one to get political, but I'm more a realist. But this is about your money. Who cares what we're talking about political-wise? It's about your money. This is the Real Deal channel, and I can introduce you to a Real Deal realtor like me, or if you like me, but I can find you one in your area by just going down below and clicking on the link. We do over 100 last year, 100 referrals. It's great. That's part of what we do. I have a whole division in my company just for that, because there's so many people who just don't understand how to hire a professional when it comes to selling their most valuable asset, their home, because they're just too emotional into it. They hire a friend or family member. They look for signs. Oh, I'll hire that. I like that sign on the lawn. There's a lot more to it. I did a whole video on that. You got to check it out. So politically, what's happening? Trump, he's demanding rate cuts while he's implementing these inflation-boosting tariffs. It's like a tug of war. Tariffs raise prices. Fed keeps rates high. Housing feels the pressure. And it's all like a crazy circle. And I think the mainstream media isn't really connecting with all this, because Trump, he understands real estate better than any president we've ever had. He's a developer at heart. He's not trying to wreck the housing market. He's trying to reshape it. It takes time. After it's been unraveled for the last 4 years with our prior administration doing all the damage to our country, he's trying to just reshape. His goal is to reset the economy, especially construction supply chains. That's really important. reshaping. He's not trying to hurt the economy because the real estate market is right now a little short-term painful, but I think long-term promising. And if this domestic production grows, there's so many companies right now bringing their production back to the United States. There are countries that are investing in our country. Billions of dollars, tons of dollars are now being promised to us Americans. And who's doing all that work? It's our president, Donald Trump. Got to give the man credit where credit is deserved. So, Powell, term ends 2026. So expect some changes that Trump really wants. He really wants someone who's aligned with him with his economic vision. Maybe by then, people will start getting it because we're kind of witnessing this economic tug of war. Home buyers and home sellers are kind of caught in the middle. Rates are higher, thinking that the tariffs will cause this inflation, and it's just one snowballing thing. And I think strategically, investors are not retreating right now. I think they're just repositioning themselves. They're repositioning themselves in this marketplace for the next disruption, getting themselves ready. And if this information is helping you make a little sense of this market, stick around. And if you've got questions or want me to dig deeper into anything, please drop them in the comments. I love to hear the comments. I'm here to give you the real deal, what's going on in real estate. So what's next? Well, the market now expects rate cuts starting in July, but nothing's guaranteed, right? And then the tariffs, they might prolong inflation before helping supply chain stabilize. Now look what Trump has done. Like I said with Saudi Arabia's prime minister today, he's pouring billions and trillions into our US economy, making that commitment. The Fed is kind of stuck between cutting too soon and risking inflation. That's their story. Or waiting too long and crushing growth. My prediction, most likely mortgage rates will stay above 6% most of 2025, but I'm hoping that I'm wrong. I don't think anybody really knows. But opportunity, I feel, still exists if you're a smart and patient buyer and seller. You gotta be smart and patient. Position yourself. Talk to a real estate consultant. Find out what's going on. Let me find you a real deal realtor in your area who can give you the goods. So I know that's not the news most people really wanted to hear, but I always promise a real deal. It's the truth. No rate cut in June. Summer and fall will be bumpy for housing challenging, but disruption equals opportunity for strategic players who can see beyond the headlines. And domestic manufacturing growth, it could stabilize prices long term. Lots of good stuff here. So if you're a buyer or seller, you can still win in this market. You must be strategic and patient and just have clear-eyed expectations. That's why you need to talk to a real estate professional that knows their stuff. Because even at 6.7%, you're still building equity versus renting, and you're locking in your tax advantages and hedging against the rising rents and all that good stuff. So if you're trying to connect all the dots between housing, inflation, and tariffs, make sure you check out the video I did earlier, a couple of weeks ago. Will Trump's tariffs crash the market or save it? Kind of my take. It breaks down how these trade moves could be fueling the very pressure that keeps rates high and what that means for all of us.